Hi, everyone. Good morning. I am Rachel Katz with Key to Debt Free. Welcome to Money Mornings with Hannah Kessler. Obviously, I'm not Hannah Kessler. She's out today, and I'm very grateful to be filling in for her while she's on a trip out to Arizona with her father for some presentations. So again, super honored to be here to host her show today. And we're excited to talk about a few topics that I know many of us are concerned about out there, which is one, student loans. Lots of changes in the student loan industry, and we're here to talk about those upcoming changes as there's a lot of windows that are closing, especially if you are a federal student loan borrower. I'm happy to introduce my son, Jordan. This is Jordan Katz.
Nice to meet you guys.
He works with us at Key to Debt Free and also starting to work with the Money Multiplier and Hannah Kessler. So excited to have him on as well. So, Jordan, let's just get started. Let's talk about some of the upcoming changes that are happening in the student loan industry.
Okay.
Particularly, the most pressing one is regarding the SAVE plan. SAVE plan borrowers, this is a income-driven repayment plan that was put into place back a few years ago, right after COVID, that unfortunately did not pass in Congress and is now defunct. And there's over 7 million people sitting in that program right now that are not earning any credit for forgiveness programs. And also, if they don't move from this payment plan, they could be potentially placed into a plan that is going to be way more expensive than what they are paying now, if anything, and also not giving them credit towards a forgiveness program. So let's talk about the SAVE. So the big, beautiful bill from President Trump's administration is taking away the SAVE plan. So with that being said, the only option for borrowers starting July 1st is to move out of that income-driven replan and into something that's better fitted for them. So why don't you talk about a little bit some of the clients that you've been working with to switch them over to SAVE?
Okay. So the clients that we do have in the SAVE program, we do want them to be switched out before July 1st or anytime 90 days after July 1st, or they will no longer be able to enroll into an income-driven repayment plan. They will be stuck in the standard plan or the RAP plan, which is the new income-driven repayment plan that has been introduced by the Trump administration. But we do not want our people to be in this plan because it is a 30-year repayment plan. So being stuck into a 30-year repayment plan would not be fun. So we really want to try to get everybody switched into one of the income-driven repayment plans that are still available right now in the moment in that window. We have about 5 months to get into that new window, or else it will be too late.
Let's see, the next topic that I actually want to bring up are Parent Plus loans. There's a lot of Parent Plus loan borrowers out there. These are people who took out loans maybe for your children or grandchildren, and now you are actually financially responsible for those loans. Most borrowers don't realize that they actually can qualify for an income-driven repayment plan and forgiveness programs if they simply do consolidations and move those loans into the correct loan type to be eligible for those plans. The Trump administration is going to be removing the ability to enroll in those plans. I believe July 1st is the end for those Parent Plus loan borrowers to get consolidated and enrolled. So if you are someone out there with a Parent Plus loan borrower, I highly recommend you get in touch with us so we can take a look, figure out what needs to be done to get you enrolled in those programs as well. Let's see, the third topic here regarding that would be defaulted student loans, or those who have not been making any payments on your student debt. Most of us haven't since 2020. After COVID happened, all loans went into forbearance. So kind of everyone forgot about him. Yeah. And with all of these different changes and things, there's been so many different obstacles and really program changes that no one really knows even what's going on. So again, it's very important that you're logging into studentaid.gov, logging into your loan servicer portal, and start looking at the information and reading the letters that are telling you what to do, because you do not want to end up in a defaulted situation with the federal student loan. January 6th, it was supposed to be resuming garnishment of wages and also taxes if you were in default. However, they decided to extend that deadline. We haven't heard when they'll be resuming taking garnishing wages or tax returns, but we are predicting that probably being around fall time. Some of you may have also heard that the U.S. Department of Treasury is going to be taking over a big chunk of these federal student loans. And that is correct. They are planning to have all defaulted student loan borrowers go onto the Department of Treasury. And once it's there, that is where the risk really happens if you are not making payments. So again, there's tons of relief out there. If you're concerned because you can't afford your payment, or you're afraid of that it's just going to be too high, get in touch with us so we can help you assess that and figure out the best way to resolve your student debt situation.
100%. This is also a huge issue too with a lot of our clients.
Mm-hmm.
I noticed that I'll ask them on the phone, I'll say, hey, when's the last time you logged into your studentaid.gov account? And they're like, oh wow, it's been years sometimes. So it's really important that you do log in, because sometimes you'll be switched into a new repayment or a new plan and you have no idea. You won't get alerts, you won't get emails, you won't get any notifications. And the longer you're sitting in a new plan that you now have a payment, you might be in a forbearance or deferment, or you might have had a $0 payment in an income-driven plan. But if you don't recertify, or you may have been illegally switched or switched into a new plan without even knowing about it. And if that's the case, now you're just sitting there with a payment that needs to be due.
Mm-hmm.
And now you're going into a default because you haven't paid it in months, years.
Yep.
Who knows?
And once you're in
very
default,
important.
absolutely. And once you're in default, any kind of bad debt, it affects your credit negatively, right? And that's part of one of the other programs that we are working with is credit restoration, specifically around student loans. We've been helping many clients restructure, but also get those corrections on their credit report so we can improve their credit score. Frankly, the federal student loans shouldn't even be on our credit reports because these were need-based loans and not credit-based. However, they are. So it's extremely important to stay on top of that so that you're not negatively being affected through your credit as well, which would prevent you from, buying a home, getting an auto, even renting a place to live. I have some clients calling me right now because their student loan is affecting them even getting somewhere to rent. So again, make sure if you are a borrower, pay attention. Now is the time to start looking into this and making the decisions now on what programs you should enroll in.
Sure. We have a client, a good family friend of mine actually, and her new husband wanted to get a mortgage for their home, but they didn't have good credit. And one of the things that was affecting their credit was actually the student loan. So us removing that student loan inquiry off of her credit actually boosted her score up about 100 points. So it's huge effect on the credit, and definitely something that you want to look into. So.
Absolutely. So, and also just to kind of piggyback more on the credit restoration services. So guys, there are a lot of, maybe you've seen online, people talking about credit repair and how you can dispute things on your credit to get it removed. Yes, that is actually something that you can do. And some of the services that we provide are helping expedite getting that stuff off. We have success stories of getting items removed in less than 30 days, some as quick as 7 days. Which increases your score right away, allows you to re-leverage it. A lot of people don't realize that old debts that have been sitting on that credit for years can be easily removed if you just understand the right letter to send in. That's what we do. We use the Fair Credit Report Agency Act. We use UCC codes that allow us to dispute specific things on credit to help you start fresh and rebuild, and more importantly, not be in that situation again. So we do credit restoration, but we also do credit coaching, how to take advantage, how to build that score, and then leverage debt and credit to, fulfill your financial obligations or goals. I think actually we have a couple people on. Let's see. I think Andrew Sabo used our credit repair services not that long ago, and I think he saw something like a 50 or to 100 point increase. So that was a success story for him. He's a young guy just starting out. So now he has a great credit score to kind of rebuild and build out his financial picture and achieve some of the goals that he needs, that he's interested in. So hi, Andrew out there. Thanks for joining us today. Also, guys, if you guys have any questions for us or anything, put it into our chat. We'll be responding to those. If you do, that would be great to have some interaction here with us. And let's see here. Let's talk about, let's see, what do we got going on? Let's talk about, negotiating bad debt. So a lot of people think, oh, I'm just paying the minimums and that's going to help. Well, minimum payments to your debt isn't helping at all. It's not paying it off. Oftentimes it's barely covering, if any, of the interest. And it just makes it look like on your credit that you're making a payment on time, but the debt doesn't go anywhere. DTI is still high, utilization is still high. So we have different tactics to help you resolve that debt. And most people don't realize that you aren't in any negotiation power with any debt collectors, unfortunately, until you've already are past due or in type of collections. And at that point, that's actually where your best leverage is to go in and say, look, I'm ready to negotiate this debt now because I have a lump sum money to pay it. But most people don't find themselves in that situation, so they just keep paying the minimums, never getting out of debt. So if you are struggling with a lot of debt and your guys are interested in figuring out strategies to expedite that debt payoff, then get in touch with us. We love to talk about the different strategies that we're using, specifically around even infinite banking concept. That's a great tool to use to expedite debt payoff. In fact, let's see, what does he say? Can you put in the chat, student loan site, check? I'm sorry, Dexter, what is that? Can you put in the chat, student loan site to check FSA. To see? Oh, gotcha. Yes, I sure will. So it's studentaid.gov. And then, of course, your loan servicers. So your loan servicer account.
Some of those loan servicers might be Mohila or Nelnet, Ed Financial. Older loans could even be Sally Mae.
Yes, those are some of the older loans as well. There we go.
Advantage.
So yes, anyway, going back to negotiating bad debt. So again, if you guys are interested in learning about these different strategies, or you're in a situation where you, maybe are past due, or maybe even going close to collections, let's talk about how we can resolve that using some different strategies, not just infinite banking, but also, some things that I've used in the past for myself. I'm gonna go here real quick, 1 second. So let me just explain one strategy that we did with one client that was already behind on some of her credit cards. So rather than continuing to pay the monthly payments to the credit card companies, we decided to structure a infinite banking policy where she was taking that monies that she was paying to the creditors and flowing it into the policy for about 6 to 9 months. Once she had that nest egg there, and the loans the debts that she wasn't able to satisfy before, we were able to go in to those companies and negotiate literally pennies on the dollar for them to minimize what she would owe. So we took the money from her policy as a loan to herself, and then we went and paid off that creditor. So now she, instead of paying the creditor every single month, the minimum balance or minimum payment, which wasn't paying off the debt, she's now able to put that money back into her own pocket and now pay herself back with interest into her own policy. So these are some different strategies that we can talk about using IBC around your own specific debt. Also, let's see here. Studentaid.gov. Perfect. So did you want to mention anything else, Jordan, about, student loans, about credit repair, about...
I'm thinking.
There's so much to talk about, right? Exactly. I mean, your peers, a lot of your friends are graduating now and looking for opportunities to, one, take care of their debt, but also build off of that. So what are some of the things that, your friends and people are looking for when they're looking for financial services or financial education? What are some of the topics?
I think a lot of my friends, being in their young and mid 20s, still aren't completely focused on these things. You know, they're still worried about what job they're going to find or what career path they want. A lot of times I mention to them, hey, it's really important. You should get into some type of forgiveness program. It can lower your payments, but they never really take initiative. But it's always later down the line when they're in their 30s and they realize, oh my God, I have these bills, I have debts to pay, I have a family to feed. That's when they start to simplify things and they're like, okay, I really need to take care of the student loan, or I really need to get my credit in place. I think that's something that is lacking in our generation. It's just people that are, you know, financially savvy or just understand how even taxes, you know, how to pay their taxes.
Absolutely.
Or how to build their credit.
Exactly. So, and I think that's another thing you just brought up is the lack of education, the lack of financial literacy here in our country, which is why we do what we do here. Hannah does, and myself, along with a lot of our other, sorry, threw a pen at you, Jordan, people in our organization, is we're out here trying to educate people, let people know that there's solutions, there's options out there for you to take back your power, take back the control over your finances. And it's all with understanding what are the options, what are the solutions, and then working with the right professionals to help you achieve those goals. So again, yes, Dexter, the studentaid.gov account is the Department of Education website. Okay, this is what houses every single piece of information regarding student loans, programs, promissory notes, etc. So most people forget about this site, or they've known it as what's called FAFSA. That's the free application for federal student aid, right? That's what we filled out to get the loans. Well, after we get the loans, they kind of don't tell us about this Department of Education website. And all we do is get a bill from the loan servicer 6 months after we've graduated, right? So now all we're dealing with is that loan servicer, and that portal doesn't hold all the information or the information on the programs that you could qualify for payment relief, for forgiveness, and other types of programs that will help with this federal student loan. So the state.gov and your loan servicer portals are the most important resources for not only you, but for us to help you figure out what programs you can qualify for. So Dex, thank you so much for chiming in and having your people get prepared with these items. You guys can go to our website, key2debtfree.com. You can also see the different services that we offer there, as well as set up a complimentary consultation. So I'll put that in Key to Debt Free. Is that right? Yeah. In the chat here, if you guys are interested in checking us out there.
And not to cut you off, but your loan servicer, the website for your loan servicer, whether it's Mohila or NowNet, is different from your FSA, which is your studentaid.gov. The loan servicer is just where you're paying that bill to the Department of Education. Usually doesn't do a breakdown of your loans. That is what the studentaid.gov is important for. We can check when you went into repayment, what repayment plan you're in, when you graduated, all the loans that you have. Do you need to consolidate? Do you even qualify for forgiveness? There's so many different aspects that go into it, and that's what the FSA or the studentaid.gov account gives us, is kind of a breakdown. But it's very difficult for most of our clients to even navigate the site because there's so many different tabs, so many different windows, so many different buttons. And that's pretty much what we've been doing over the years, is just, you know, really just learning the system, even just learning how to navigate the studentaid.gov.
And just staying on top of like all 100%. Of the changes. I mean, with all these changes, how can we even keep up with, you know, what's going on? And unfortunately, if you have this debt, like, we don't have the control here. It's a government debt. So if you owe them, they have the control.
Right.
And the only way to really take back control is to understand that these different programs are available to you. You know, you brought up a good point about people not knowing even if they qualify for forgiveness.
Yeah.
I have clients right now that are sitting already eligible for forgiveness, but they just don't know that. So, or they haven't been able to put in the right applications and documents to get to get approved.
Yeah.
So again, take a look at that. I think Sabo, he has a question here. What are some ways? Oh, we're pivoting to credit. What are some ways that we can build credit after going through credit restoration? It's a really good question. So again, what's important about credit is obviously history, your good standing, the number of accounts that you have on there, if they're good standing. Do you have revolving installment loans like a car loan, a mortgage, right? Credit bureaus love that stuff because that is paying every single month on time, and that helps build your credit. Another way to do it to expedite, we are also able to do authorized users and put in trade line accounts onto your credit, personal or business, to help build that credit profile faster. Let's see, what else can we do? There's a number of different things just depending on what you're looking to achieve. Our whole goal with credit repair is to fix your personal credit, but then be able to teach you how to use it wisely by getting this debt, getting this credit, and deploying it out to make money for you, whether it's investing in a business, whether it's putting it towards, any type of asset that's going to generate an income. So that's a good question, Sabo. Let's see, what else do we have here? So, okay, any more questions? Awesome. I think one more thing. What is this? Oh, yes, just talking about funding. So business funding. A lot of people have small businesses and they own businesses, and one of the biggest issues they have is cash flow, capital. How do I get money so that I can put it into my business so I can make more money? And often we're going to the banks, we're asking for loans, but we're doing it all under our own personal name, our personal social security, which if you're over leveraged, you got a mortgage, a car payment, student loans, you may not be able to get the type of funding that you need to put into your business to grow. So how do we go about getting that money? It's about building what's called a business profile or a corporate credit profile. This allows you to really separate yourself personally from your business identity, your business EIN, and build up that profile so you can use the business as the person going out and applying for the credit, for the funding, and now completely taking yourself personally out of the equation. We help with that as well. So to leverage that bigger banking, the bigger bank money rather than building out that corporate credit profile compliant to how banks want to see your business to make you more fundable. What's another great part of our program is that we do soft pulling. We go and we look and shop around all the different banks and financial institutes that are offering credit or debt, and we determine which ones will fit for what you need, as opposed to just going and running your credit and business credit a million times, which ends up negatively affecting it over time. So we want to just make sure that when we go and apply for funding, that we're actually going to get it, and that you're going to be using it for your best interest into your business. So let's see what else we got going on here. So taxes were yesterday. Hopefully everybody filed their taxes on time, or at least got your extensions. We will probably be hosting another couple videos moving up until October where the extension is about taxes and tax planning, and really how important tax planning is. It's one thing to just file your taxes and make sure they get it over, but are they being filed to your best benefit? Are you sure you're getting every single tax deduction, write-off in regards to your business or personally? Having a good professional, someone who understands all the ever-changing laws of the IRS tax code, is extremely important, and we have a lot of people in our network that need those services. So if you aren't happy with your CPA, or maybe you've never had a CPA and you're just trying to understand the tax industry, like Jordan, who's probably this one of your maybe first or second year you'll be filing taxes as an adult. So we definitely have resources and people we can connect you with to get those questions answered, and make sure that you're taking advantage of all of the benefits through proper tax filing. So let's see. If there's anything, will this show? Okay, perfect. Oh, what was this? I have a friend that is in default with their student loans. What would the process look like for them? Okay, so if they're already in default, what we want to do is we want to look up studentaid.gov, but you also want to look up, what is it, myeddebt.ed.gov, I think it is, .ed.gov. So this is the Department of Education website for those who their loans are already in default. So this is a different portal that you need to set up an account with so you can see where those loans are and with which collection agency. So once we've found out where the loans are, what we do, we can assess one of two things. In some cases, if you've never been in default and you've never had a loan consolidation, we can do an immediate loan consolidation and put those loans back into good standing without you having to make any past due payments. So by doing that, we make the loan, like I said, in good standing, and then it becomes eligible for income-driven repayment plans or forgiveness programs that would not be eligible to you, leaving them in default. And more importantly, we're going to prevent you from getting garnishment. No one wants your wages garnished or your taxes. And if the IRS is doing that, it's a very difficult process to get out of that. So we want to avoid that from the very get-go. If you are in default and you've been in default with your student loans before, there's another program that's called a rehabilitation program. It is a 9-month program with the collection agency. And what we're doing is we're basically signing up for their program. You can pay as little as $5 a month to just show them that you have good faith in paying back this debt. After 9 months, we can then enroll them, they'll be in good standing again, and then we can move forward in enrolling them into a payment relief plan and or forgiveness program. So definitely options for defaulted borrowers or people who are already past due. So if you go into your loan servicer account and you see that there's a past due amount, don't worry about it. If you can't pay it, get a hold of us, because there's processes that we can complete for you that will bring that past due balance to zero. So you won't have to make any payment to it, and then also set you up for payment relief plans, income driven, and then more importantly, the forgiveness program. So I want to clarify too what the forgiveness program is. A lot of people have misconceptions of what is forgiveness? What does that actually mean? And really, the forgiveness program means the end date to the loan. It's the end of the repayment term. So there's 3 different forgiveness programs currently. There's a 10-year, a 20-year, and a 25-year. The 10-year program is considered public service loan forgiveness. Okay. Public service loan forgiveness is eligible for any borrowers who work in government, nonprofit, public service careers, teachers, firemen, doctors, police officers, nurses, librarians, exactly. A receptionist at a nonprofit organization. All of these people work for public service. So they're incentivized by a reduced repayment term of 20 or 25 years to 10. Another thing that's beautiful about the program is this is how it works. When you're enrolled in the income-driven repayment plan, this is not about how much money you're paying per month towards the loan. It's about the month counting towards the forgiveness program or the repayment term. Because once you've reached 120 months or 10 years as a public service employee, you get principal and interest of your student loan completely forgiven, tax-free. So like I mentioned, these programs before have been in effect since 2008. Okay, 2008, that means there are borrowers currently who are working in public service from 2008 to 2018, or even now, that could already qualify for this public service forgiveness program. In fact, I had a client call me just a couple days ago, and they're already eligible for the forgiveness. So we're going to be able to consolidate her loans, enroll her into the income-driven repayment plan, and get her public service loan forgiveness without her having to make one more payment towards her student loan, because she's already exhausted the requirements to be eligible for that program. So this is why it's super important to take a look at your guys' loans and just see, what do you have to lose to see if you could potentially have loan forgiveness sitting on the table, right?
And just to add on to that, what this means too is it's when you've worked in a public service or a nonprofit from your repayment. So we have a lot of clients that sometimes have worked in public service for 30 years, but they only went into repayment on their loans in 2018 or 2020. So it's whenever you went into repayment, that's when the 120 qualifying payments or the 10 years actually starts. It's unfortunate, but that's just the way the government has
That's the way the program works.
Exactly.
Yeah.
Or how the program actually works.
Let's see, what does Sabo say? Oh, what if her student loans are private? Okay, that's a really good question. So unfortunately, private student loans, which many of us out there have them, do not qualify for any of the federal relief programs. However, we have strategies, again, using the infinite banking concept policy on how we can expedite and pay off those private debts much faster than through what the program they're working with now. Because that is the biggest benefit, is if you are able to expedite paying off that private student debt and then focusing on either the federal debt and other debts after the fact. Because the private student loan still accrues interest quite rapidly, similar to the way the federal student loans is. So if you don't tackle that interest payment every single month, it's going to balloon out of control, and you'll be paying, 30, 40%, 50% more than what you've even borrowed. And that's what we're seeing with most.
That's the issue with a lot of our Parent Plus borrowers.
There you go. Yep.
They'll take out a 50, 60, maybe $100,000 loan for their kids. But after that 20 or 25 year term, shows that they'll end up paying $300,000 or $400,000, almost 3 or 4 times the amount. So yeah, so for private debt, it's very important to just get an assessment of that and figure out how to expedite paying that off as quick as possible. Oh, hi, Dave McKittrick. Nice to see you. Yes, we need to get on a call and go over that. I've missed you the last time. So nice to see you. Thanks for joining us today. Appreciate it. So let's see what else we got here. If there's any other questions. So yeah, again, just going back to the student debt, going back to credit restoration services, all of these things to kind of help solidify our financial foundation. Understanding this, our debt is the key, literally, to building a strong financial future. And when you tackle that debt, you understand how to leverage it, debt and credit, for your benefit instead of drowning in it like they want us to be. Yeah. Now you've got the control back. And using, infinite banking, the concept, the policies to become your own bank, you now take all the control back and are deploying your money the way that you deem fit. So again, we appreciate, all of these different comments coming in, and on one, Hannah allowing us to take over her show this morning, a little impromptu. But if there's any other questions, guys, on our feed, please shoot them out to us. And we're going to wrap it up very soon here. So, okay, I don't think we have anybody else here. Who else we got still on here? Okay. Awesome. So again, guys, I'm going to put in here do we have our link for, let's see, I think it's keytodebtfree.com book a call here. If you guys are interested in setting up a complimentary consultation with us, here in the chat is our link to the calendar. Would love to see you. Would love to talk to you about your situation. Hey, Stephanie Heisel, that's my girl. What's up? She's out there in Florida. Stephanie and I went to school together, went to college at DeVry University in Keller. So we've been friends for a very long time. Super nice to see you joining us today. Appreciate you. So Stephanie has student loans, right? And I know we're going to be getting hers handled. So we work with another program too, just so I know you guys, throw this out there for you guys who may have gone to schools that one closed down or misled you,
or their curriculums or the programs that you'd initially enrolled for ended up going away. The program is called Borrower's Defense to Repayment. That program allows you to put in a questionnaire and potentially get all of your loans fully discharged based on the answers of that questionnaire. So that's actually how I got into the student loan sector. Is I learned about not only income-driven repayment plans for my own student loans, which was $111,000 back in 2016. I graduated with 2 degrees, undergrad and a master's in finance, but $111,000 of debt. I also wasn't going to be able to afford an $1,100 payment. So that's when I was introduced into this world of income-driven repayment plans, forgiveness programs. But I thought it was just for public service employees. But in fact, it's for anybody with a federal student loan.
Yep.
So in going and enrolling in those programs, I learned about the Borrower's Defense to Repayment. And because of the school that I went to, and when I went to it, it had been sued. DeVry University was sued for malicious or marketing practices. And I was able to get all $111,000 fully discharged from the federal government back in 2022. So that program still exists. So if you feel you are a victim of your college, your university, or that you went to school at a school that was sued for either class action or for closing of their curriculums, I highly recommend reaching out to us because we could potentially get you full discharge through this program. So Stephanie, I think you might be eligible for this since we were going around the same time. So we'll work on that.
I think Dave has a question.
Dave, heard some people doing credit stacking. Yes, Dave, that's credit card stacking. That is a strategy. Absolutely. It's a disciplined strategy, but it is a very, very good one if you are disciplined. And yes, we can coach on that and connect you with the right groups of people who can help facilitate those types of funding measures. So great question, Dave. I know that there's been a lot of chatter about that credit stacking and what have you. You just want to make sure that you are doing it the right way and you don't find yourself in a worse off situation because it does take some discipline. So cool, Steph. I'll be looking forward to your call. Wonderful. Wow, we're 38 minutes in already. I think this is awesome. I didn't know how it was going to take, being our first time on there. This is kind of fun. I can see us doing this regularly. I'm going to have Hannah, teach me a little bit more on this. She's so good at it. Anyway, hopefully she'll go back and look at this and be proud of us. Hopefully we did her a solid today. Awesome. Anyway, guys, if there's no more questions, we'll let you go this morning. We really appreciate your time. And the questions were great. And we look forward to seeing you on a consultation or perhaps the Money Mornings with Hannah Kessler again in the future. Yeah. So thanks again, Hannah. Thanks again, all of her network out there. And we look forward to seeing you guys soon. So reach out, keytodebtfree.com, guys. We appreciate you.
Thank you.
All right. Bye.
Bye.